All right, good evening. It's 9:30, Sunday, November the 19th. Took about a week off. I'm back, and I'm going to begin with the Euro on the 240. So it's basically looking as if apparently wave 4 has ended here at 115.54, and it took quite some time. And now that it as the pattern has taken its course, it appears that we were in a flat combination. So if this was the top of wave 3, you have the 3, and then the 5 wave move for W. Then you have the X, and then you have the A, the B, which is the 3, and then you have the 5 wave 1, 2, 3, 4, 5. And so this is wave 4 basically. So this entire move, which started in September the 6th or something around there, roughly took about 2 months to basically show itself. So it took about 2 months and it finished. So in that case, you can count a 5 wave move from this bottom here for wave 1. Now I ended up going short at 17.95 once I spotted this pattern on Friday, and a few hours ago we had an impulsive wave to the downside, and so now I'm expecting two things that could happen. This can be the A, this can be the B, and then this is the 1 here, the 2 here, possibly 3 would find support at about 17.10, give or take. Then you'll have a wave 4 and then a wave 5 for C that would end near the 1660 level for wave 2, which is also around the 0.618 level. The flip side of that is you have a B, and then you have this current bar at 1721. You may find another smaller bar that can possibly end at around 1710 for C of W. So then you'll have a W here, you have a move up for X, and then you have wave, a move for Y that could push you below 1660 for 2. Either way, what's likely to happen, if you count this impulsive wave as 3, then 4, then 5, well then you'll basically, a move to the upside should be over the next day or so. And if I'm not mistaken, that's probably what's most likely going to happen, is that you're going to see, but either way, it still can be the W could be here, and then you have an X, or it can be this is an A, B, C, and wave 2 is complete. So either way, if price continues to find support at around 1720, between 1720 and 17, let's say 05, well, most likely a turn higher is expected tomorrow. So with that being said, I'll more than likely lower my stop to right here to lock in about 40 ticks, and then I may trail it and go from there, because I want it to, if it breaks 1720 with a little bit of impulsiveness to it, then prices should continue lower to around 1700. But if it continues to find support at the around 1722, and it does not go below that, then prices is going to turn up. So just keep an eye on the euro. Over to the pound now. Let's see where I'm at. Always. Pound 360. So this is more than likely the top of wave 4. So then the problem with this here, this discount is a bit tricky, because you basically would have to count this 36 to 34. So this 200 tick drop would be, or pip drop would be wave 1, 2, and then you have this entire wave move down for 3. You have 2 ways to count this particular corrective pattern, which you can see here. You have a 3-wave move here, you have a 3-wave move here, and you have a 3-wave move here for W. However, this can also be wave 4. Within at that point, this would be a 1, A, B, C for 2, and then you have another 1, 2, with an expectation of prices to go lower over the next course of the next couple days. On the flip side, how I have it is this is the A, B, C for W. Then I have an A. Then you have another A, B, C for B, and then 1, 2, 3, 4, 5, C for X. So you have a A, B, C for X, and now you have an A, B, and then if you from the bottom of the X to the top here, this A to this B here, it's all wave C is already at equality of A, which is it already met the expectation for Y to be done. At 132.51, prices found support or resistance at 132.62. So in that case, you can technically call this top wave Y, and then this will be the end of wave 4. But on the other side of that, if for the equality from W to Y would basically mean that W equaled Y at 0.618. So what I mean by that is if I just look, if I show you this here, if I see this here, if it comes up and I just put in the 0.618 here, you can then see that at 132.32 prices basically wave W was 0.618 of wave Y basically. So, and in the rule book it is wave W can either equal wave Y at 100%, it can equal at 0.618, it can equal at 1.236 or 618 or 382. And it can continue based on the fib levels, but more than likely it's either 0.618 or 100%. And so when I look at this, basically if Y was equal to W by 0.618, and then you have the A 50% of B, and then here this length, the length of A down to B 50%, 100%, it equaled at 32.51. It went just above that and it found resistance. So with that being said, it is possible that wave Y is done, and then you should see another move to the downside. But then when you compare the pound and the dollar, now they're not always, I'm sorry, the euro, they're not always in correlation at the same time. However, you don't see an extensive move or an impulsive move in the euro without the pound at least following to some certain extent. But you can't always think that that's always the case, or because it's not always correlated to the T. So if we're going to look at that being somewhat of the case, well then this is why I have my stop loss here at 132.3182. So I've already locked in 100 pips of my 119. If prices throughout the night was to come through this, well, once it finds some support here about 131.40 or so based on my Ichimoku cloud, then price should turn back up. And then if I was to go short, I would do so. However, if price continued, well then I'm still in a trade. So if this is not the Y and the Y is in fact up here, well, I didn't prematurely get out. So either way, like I said a week ago once I posted in the euro, my expectations on that particular move, as if we went back, my expectations here when I was in this was I think it was prices was like right here, and I was expecting one more move below 115.56 to around 115.30, but it found its support and prices moved up, and I didn't make any of this trade, and that was okay, because if you go back to my video, my last video, I said I was my alternate that prices would turn up. But if prices turned up, what happens? You're going to have to find that you just find another opportunity to get in. So clearly, I found another opportunity to get in once once I saw 5 waves. Then I saw a 3-wave move here. I said, okay, well, if I see a 3-wave move here, I should see a 3-wave move here. And then once I saw this consolidation, I knew that this would be a great entry for me with this particular stop here, uh, basically being my stop loss. So at 17.95 with a stop loss of 18.23, that's not a lot of risk. At max, I would have went here at 18.60, but I put my stop loss here, and then all of a sudden you see it broke down. Now I have all of this in, and the rest of this is a free trade. So once you start to understand Elliott, and then you put a few other technicals in there, it becomes a pretty powerful tool to keep in mind. The last market I want to show is the Euro Aussie. I really think that this is probably a really good opportunity. I had originally got in this market when wave C completed here. I think I got in right here somewhere like 137, 138. I took this entire wave up for roughly 900 or so ticks. 900 or so pips. One of my earlier videos, you can go back and see it. I had then waited for this to do its course. I wasn't sure what was going to happen, and then I think I got in again here at like 146, and I got out, I believe, right here, because once it went above, once it found resistance at the one lesser degree here, I expected prices to go lower than what it did, and it didn't. And in that case, I kind of just let it run its course, and I knew that this was going to be an ending diagonal, and this impulsive bar ended up shooting up, and it found, I believe at this point now, wave 1 is done. So with that being said, if wave 1 is done, an Elliottician would expect prices to come back down to at least 147 at some point. So and if it could be going a lot lower than that, 146, if not lower than that. So I went short. I think earlier today or Friday or one of the two. So 66 pips so far, and I'm expecting this to be a pretty good trade. But on the flip side, uh, in the next probably somewhere next year, first beginning of the new year, or maybe January, February, once prices does get into this area, if this was wave 1, and let's say this is wave 2, wave 3 would need to go above that B, and it will need to go above 165. So on a long-term trade, this is going to be a perfect opportunity to catch a extremely profitable trade in the short-term future for a long-term trade, basically. So just keep your radar on this Euro Aussie, because I believe in the next few months, once price does find support in this area and wave 2 is complete, that wave 3, 4, and 5 will be a monster, and you're talking a lot of pips. You're talking anywhere between from 144 all the way to above 170 or so. So it could take you a year or so, but it can be a tremendous profitable trade. So this is one of the hot currencies to keep your eye out on over the next course of the few months. But for now, I'm going to end this. Just keep a lookout on the euro, keep a lookout on the pound. New Zealand probably has a little bit more left to the downside before it consolidates, but for the most part, the two that I'm going to focus on today is the euro, the pound, and the third one will be the Aussie, Euro Aussie. Tomorrow I'll come with a couple other pairs and probably take a break for the holidays and come back towards the end of the week. I hope this helps. Happy trading.